bill for the COVID response is going to have to be paid by someone. I mentioned that the U.S. national debt per working individual at the end of next year could be approaching $100,000. So thus far, the financial authorities, the Federal Reserve, the central bank in the U.S., has decided to fund these debts with newly printed money. But at some point, the amount of money that's required to fund these debts could become significantly inflationary. So yes, I am concerned that the debt levels within the U.S. economy, particularly public debt, could approach a level where we would have to really aggressively inflate the economy. And at that point, we would start to see the popular measures of inflation begin to rise materially. And it may be difficult for the central banks to be able to get control of inflation measures that begin to rise. Perhaps a doubling in the inflation rate within a year or two would be a real problem for the central banks. So, the debt is going to be an issue, but we've been able to kick the can down the road so far. As far as how individual clients might respond to the debt problem that I was mentioning earlier, the debt issue really becomes a problem for the markets if inflation becomes the policy to respond to it. So a significant rise in inflation would be the sort of the outcome from the debt problem. So the way we've chosen to respond in our portfolios is to skew the portfolios a little bit more towards cyclical businesses that respond better with stronger economic growth, because ahead of any inflation, we would see stronger economic growth. So cyclical businesses, companies like industrial businesses, materials companies that are responsive to a stronger economy should do better as a precursor to any inflation. And that's exactly the way we positioned our individual securities portfolios at Fort Pitt Capital.